Right. So Mahindra and Mahindra, they just released their Q2 results, fiscal year 2025. And
Gee, they're impressive.
yeah, seriously impressive. 35% jump in consolidated PAT. That's 3,171 crore rupees.
Yeah, and you know what's interesting? Even year to date, if you take out those one-time gains from last year, they're still up 27%.
That's huge. I mean, clearly they're doing something right.
Absolutely. It's a real success story, especially when you consider the global landscape right now.
Right, because it's not exactly smooth sailing out there for everybody.
Not at all.
So we're going to dig into their recent quarterly report today, try to understand how they're achieving this kind of performance, especially in the, automotive and farm equipment sectors in India.
Yeah, those are their core areas, right?
Yeah, absolutely. So let's start big picture. What's the industry landscape they're operating in?
Okay, so if we look at tractors in India, things are looking pretty good. I mean, good rainfall this year, right? 8% above average.
Wow, that's significant.
It is, and that's led to some really healthy reservoir levels. We're talking around 87%, which is 15% above the long-term average.
So good news for farmers.
Good news for farmers, good news for agricultural output, and ultimately good news for tractor sales.
So the rain gods are smiling down on Mahindra.
You could say that, but it's not just luck. The government's also playing a role here. They've increased those minimum support prices for key crops. We're talking wheat, mustard, things like that. 5-7% year-on-year increase.
That's a big boost.
It is. And then you add in the increased spending on rural development, and you start to see why rural sentiment is so positive right now. All of this points to double-digit growth for the tractor industry in the second half of the fiscal year.
So you've got a thriving agricultural sector, supportive government policies. Sounds like fertile ground for a company like Mahindra. But how are they actually performing within this landscape?
They're not just performing well, they're dominating.
Give me the numbers.
Okay, 42.5% market share in the farm equipment sector. That's up 90 basis points year on year. Volume's up 4% year on year as well. It's a direct reflection of that positive rural sentiment we talked about.
Yeah, it's like they're perfectly positioned to capitalize on that growth.
And they're not just riding the wave, they're driving it. I mean, look at their market share growth, consistently increasing. First half of fiscal year 2025, it was up 140 basis points compared to the previous year. And then just last month, October 2024, they hit 44.5% market share.
Wow, so they're not just holding steady, they're gaining ground.
Exactly, they're doing something right.
Okay, so tractors, check. They've clearly got a handle on that. But let's switch gears to the automotive market. I'm curious, how are they navigating that landscape?
Okay, so the automotive sector in India, it's a little more, mixed compared to tractors, but Mahindra's focusing on specific segments, and they're making some serious waves.
Well, I've heard they're the #1 player in the SUV market now. Is that true?
It's not a rumor, it's a fact. Their SUV volume surged 18% year on year, and they managed to improve their margins by 140 basis points. Their SUV revenue market share right now, 21.9%, which is a 190 basis point increase year on year.
Wow, those are impressive numbers.
Yeah.
What's fueling this success? Is it just new product launches?
Well, that's definitely part of it. Models like the HEV 3XO, the Vero, the Thar ROX X, they've really resonated with Indian consumers. But it's more than just launching products. It's about strategic positioning, understanding the market, and giving consumers what they want.
So they're not just throwing products at the wall and seeing what sticks. They're being very deliberate.
Exactly. And their success isn't limited to SUVs. Take a look at the LCV segment, light commercial vehicles. Mahindra has achieved a 260 basis point year-on-year gain in market share there, reaching 52.3%.
So they're not just growing, they're dominating.
Right.
Okay, so we've got tractors, SUVs, LCVs. It seems like Mahindra is firing on all cylinders in the automotive world. But what about their other ventures, those growth gems they talk about? Where do those fit in?
Ah, yes, the growth gems. These are the businesses Mahindra sees as their key drivers of future growth, and they're performing exceptionally well. We're talking about Mahindra and Mahindra Financial Services Limited, MMFSL for short, and Tech Mahindra.
So it's not just about vehicles and farm equipment. They've got a diverse portfolio.
Yeah.
I'm interested to dive into those growth gems a bit later. But first, let's get to the numbers, the financials. We've got all the statements here: profit and loss, balance sheet, cash flow. Let's break it down.
All right, well, let's start with the star of the show, the consolidated profit and loss statement. As we said earlier, total revenue for Q2 FY25 up 10% year on year. That's a massive 37,924 crore rupees.
Okay, so top line growth, always a good sign. But what's driving this revenue growth? Is it just volume, or are there other factors at play?
It's a combination of things. Strong demand, obviously, in both automotive and farm equipment, but also market share gains, successful product launches, and crucially, continued margin expansion.
So they're not just selling more, they're selling smarter.
Exactly, managing costs effectively and ultimately becoming more profitable.
Okay, so we've got a handle on the revenue side, but let's move beyond the P&L. Let's look at the balance sheet. What kind of financial strength are we talking about here?
One of the things that really jumps out on Mahindra's balance sheet is the sheer size of their financial services segment. We're talking a massive 130,198.34 crore rupees in assets. This really highlights the scale and importance of MMFSL to their overall business.
Wow, that's a serious chunk of change. Sounds like their financial services arm is a real powerhouse.
It is. It's a real testament to their strategic diversification. By building a strong presence in financial services, they're not just generating significant revenue, but they're also mitigating some of those risks associated with any potential downturn in their core businesses, automotive and farm equipment.
So it's like a financial safety net, providing stability and resilience.
Exactly.
Okay, so let's move on to the cash flow statement. How are they managing their cash? What does that tell us about the health of the business?
Well, if you look at the cash flow statement, you'll notice a net cash outflow from operating activities. But before you jump to any conclusions, it's important to understand why.
Okay, I'm all ears. What's causing this outflow? Is it a red flag?
Not necessarily. It's primarily due to changes in working capital, specifically a big increase in financial services receivables. Now, this isn't a bad thing. It's actually a reflection of the growth in their financial services business.
So more of a growing pain than a cause for concern.
Exactly. You have to look beyond the headline number and understand the underlying dynamics. And when you do that, you see a company that's generating strong cash flow from financing activities, primarily driven by proceeds from borrowings. And that cash is being strategically allocated to investments, to dividend payouts.
So investing in the future, keeping their investors happy, sounds like a solid strategy.
It is. And to complete the picture, we can't forget about those financial ratios.
Right, the numbers that tell the story.
Exactly. They give us a snapshot of Mahindra's overall financial health and efficiency.
Okay, so what are the key ratios telling us?
First, the debt-equity ratio. It stands at a very healthy 0.07. This indicates a strong capital structure and low financial risk.
So they're not over-leveraged, not vulnerable to interest rate hikes.
Right. Next, the operating margin. Impressive 13.38%. This tells us they're managing operating expenses efficiently and achieving strong profitability.
Okay, so they're keeping those costs under control while maximizing revenue generation.
Yes. And finally, their return on equity, ROE, is an impressive 18.9%. This reflects their ability to generate high returns for their shareholders.
So they're using investor capital effectively to drive profitable growth.
Exactly.
Okay, so if we're summarizing Mahindra's financial health in one word, it's strong. They're generating robust revenue, managing costs effectively, maintaining a healthy capital structure, and delivering strong returns. But numbers only tell part of the story, right? We need to talk about the people behind these numbers, the promoters, the management, who's steering the ship.
The Mahindra Group, it's got a rich history, goes back to 1945. It's a story of entrepreneurship, innovation, and a commitment to India's growth. Today, the group is led by Dr. Anish Shah, the managing director and CEO, and Mr. Rajesh Jujurikar, the executive director and CEO of the auto and farm sectors.
So what's their leadership style like? What kind of vision are they bringing to Mahindra?
Well, from what we've seen in their strategies and their decisions, they're a dynamic duo. Dr. Shah brings a global perspective and a focus on sustainability. Mr. Jujurikar has deep expertise in automotive and farm equipment. Together, they're leading Mahindra into a new era.
And they're not afraid to make bold moves, as we've seen with their successful product launches. Seems like they have a good understanding of what consumers want.
They do, and their focus on sustainability is commendable. It's not just lip service, they're really weaving it into their business.
Okay, so we've covered a lot of ground in the industry. Mahindra's market position, their impressive financials, the leadership driving their success. It's a compelling story, frankly inspiring. But let's talk about the elephant in the room, the risks. Because every business faces challenges.
Right, no business is immune to risk. And understanding those risks is key to making informed decisions. So what could potentially derail Mahindra's growth? What challenges do they need to be prepared for?
Well, a slowdown in the Indian economy, that would definitely have an impact. And what about a decline in agricultural commodity prices? That could hurt demand for their farm equipment and even affect vehicle sales indirectly.
Absolutely. And then there's the increasing competition in the automotive industry, especially from those electric vehicle manufacturers. Mahindra's investing in EVs, but they need to stay ahead of the curve to maintain that market leadership.
Right, the EV revolution is happening, and Mahindra needs to adapt. What about supply chain disruptions? Could that impact their operations?
Definitely a risk. They rely on a complex network of suppliers. Any disruptions there could impact production and profitability. It's a balancing act, managing growth while mitigating risks.
So how are they addressing these challenges? How are they navigating this landscape?
They're taking a multi-pronged approach, diversifying their product portfolio, strengthening their supply chain, investing in new technologies like EVs. They're not just reacting to challenges, they're proactively shaping their future.
So they're adapting, innovating, evolving to stay ahead of the game.
Exactly. And that's what makes them such a compelling company to watch.
All right, so we've explored the present, Mahindra's stellar performance in Q2 F25, and we've touched on some of the potential risks. Now let's look ahead. What guidance and strategies have they shared about their plans for continued growth? What's their vision for the future?
They've laid out a plan, they call it the 5X Challenge. It's about unlocking their full potential, leveraging their current market leadership to reach even greater heights.
5 times bigger, that's ambitious.
It is. But considering their track record and the growth potential in India, it's not out of reach.
So what are the key elements of this 5X challenge? How do they plan to achieve this growth?
Well, they're doubling down on their core strengths, auto and farm sectors, enhancing their products, expanding their reach into new markets. These are their bread and butter. They see huge potential there.
Makes sense. But what about the growth gems? What's the strategy for Tech Mahindra and MMFSL?
For Tech Mahindra, it's all about capitalizing on the digital transformation market, particularly in the BFSI sector, banking, financial services, and insurance. They're looking for traction in new deals and continued margin expansion.
So riding the tech wave, becoming a global player in IT solutions. Smart move, considering the rapid digitization happening in India and around the world.
Absolutely. And MMFSL, their strategy is focused on multi-pronged growth, increasing their assets under management, expanding into new areas like mortgage lending, and driving profitability.
So not just lending, becoming a full-fledged financial services provider, creating an ecosystem of solutions.
Exactly. And it's paying off. MMFSL achieved 20% AUM growth and a 57% PTT increase, demonstrating the effectiveness of their approach.
Wow, serious growth. But what about the risks MMFSL faces? Financial services are always susceptible to economic fluctuations and regulatory changes.
Very true. Their performance is tied to the health of the Indian economy, especially the rural economy. Any slowdown in credit demand or increase in loan defaults could impact them.
And regulatory changes could also affect their operations. It's a sector that requires constant vigilance.
It does. Navigating that regulatory landscape is crucial for any financial services company, and MMFSL needs to stay agile and responsive.
Okay, so Mahindra has a roadmap, ambitious goals and strategies to achieve them. But the question remains, can they execute on this plan? Can they deliver on their promises?
Well, their track record suggests they can. They've consistently shown an ability to adapt, innovate, and execute.
And their growth gems, Tech Mahindra and MMFSL, they seem to be performing well.
Right, but the future is never certain. External factors like global economic conditions or government policies could play a role.
It's a reminder that investing, like life, is full of surprises.
But sometimes the most exciting journeys are the ones with a bit of uncertainty. Welcome back to our deep dive on Mahindra and Mahindra.
Now let's talk about something that's clearly very important to Mahindra, and that's sustainability.
Absolutely.
And I don't mean just as like a PR thing.
No.
This is like a core part of how they do business.
It really is. What I find fascinating is they don't just see sustainability as like a corporate social responsibility.
Right.
It's a business principle.
Yeah.
It's woven into everything they do.
Right, and it's not just talk either.
No.
I mean, they consistently rank high on those ESG metrics.
Absolutely.
Environmental, social, governance, all of that.
Yeah, those ratings are a good sign that they're actually putting their money where their mouth is.
Right. But let's break it down for our listeners. What specific areas are they focusing on? Because sustainability can be a pretty broad term.
Sure, so their initiatives cover a wide range. We're talking everything from environmental conservation to community development, ethical business practices. It's a holistic approach, both internally and in terms of their impact on the world.
Okay, so it's not just about making their factories greener. It's about having a positive impact on the communities they operate in as well.
Exactly. So, on the environmental front, for example, they've made big strides in reducing their carbon footprint, adopting energy efficient technologies in their factories, investing in renewables like solar and wind, implementing water conservation measures across their operations.
Okay, that's great. And in a country like India, where water scarcity is a real issue, those water conservation efforts are really important.
Absolutely. They're ensuring a secure water supply for themselves, which also means cost savings and operational resilience.
Smart. Now, on the social impact side, Mahindra's got this long-standing commitment to rural development, and it goes beyond just selling tractors to farmers, right?
Right. They've got programs to empower farmers, promote education and healthcare in rural areas, support sustainable livelihoods. They're investing in the well-being of their customer base and the communities they serve.
So it's not just transactional. It's about building relationships.
It is, and it's not just altruism either. Mahindra's commitment to ethical business practices makes good business sense. They have a strong code of conduct, emphasizes integrity, transparency, fairness in all their dealings, and that helps attract investors and business partners.
So ethical practices, good reputation, more investment, more growth, it all feeds into itself.
It does. Now, going back to those ESG ratings we mentioned, Mahindra scores high, but what does that actually mean for our listener? How do these ratings even work?
Yeah, because for a lot of people, ESG ratings are kind of this mysterious thing.
Yeah.
What are they really measuring? Why should we care?
Okay, so ESG ratings, they assess a company's performance on environmental, social, and governance factors. Essentially, it's a measure of their commitment to sustainability and responsible business practices. And Mahindra's high scores reflect their genuine efforts in these areas.
So it's not just greenwashing, it's about real action.
Right. They've been recognized for promoting diversity and inclusion in their workforce, ethical sourcing, transparent corporate governance practices. And this matters because investors are increasingly looking at these ESG ratings when making decisions.
It's not just about profits anymore. Investors want to see companies that are doing business the right way, contributing to a better world.
Exactly. And Mahindra's strong ESG performance makes them a very attractive option for those investors.
It's a win-win.
It is.
They're doing good for the world and appealing to investors at the same time.
Absolutely.
Now, this commitment to sustainability, it's not just some recent trend for them, right? It seems like it's deeply ingrained in their company culture.
You're right. Their founder, the late Mr. J.C. Mahindra, he believed that businesses have a responsibility to give back to society, operate in a way that benefits both people and the planet. And that philosophy has clearly been carried forward.
It's in their DNA.
It is. And Dr. Anish Shah, the current CEO, he's been a big advocate for sustainability. Sees it as essential for long-term success, not just for Mahindra, but for the global economy as a whole.
He's thinking big picture, not just about shareholder value, but about a better world for everyone.
Right. So how are they implementing these principles in their day-to-day operations? Let's take a closer look at some of their programs.
Okay, like what?
Well, they've got this initiative called Rise for Good. It's all about creating shared value for stakeholders and driving positive social impact.
So what does that look like in practice? What kind of impact are they aiming for?
Rise for Good, it encompasses a lot of different things, promoting sustainable agriculture, empowering women, providing clean drinking water. It's about tackling some of those big social and environmental challenges in India.
And it sounds like they're not just throwing money at the problem, they're working closely with communities and NGOs and government agencies to create lasting solutions.
They get it. Real change requires collaboration and understanding the local context. Another program, Mahindra Hariali, their goal is to plant 1 million trees every year.
1 million trees, that's a lot of trees.
It is, and they've planted over 18 million trees since the program started.
Wow.
That's a big contribution to fighting deforestation and climate change.
And it's not just about planting trees, they're working to restore degraded ecosystems, promote biodiversity. It's a whole approach to environmental stewardship.
Right. And then there's their work on diversity and inclusion in the workforce, an area where a lot of companies struggle.
Yeah, because it's one thing to talk about diversity and inclusion, but it's another to actually create a workplace where everyone feels valued.
Absolutely. They've implemented programs to create a more inclusive and equitable workplace, supporting the recruitment and development of women leaders, providing mentorship and training opportunities for employees from underrepresented groups.
So leveling the playing field, making sure everyone has a chance to succeed.
Exactly. And they're working to build a more inclusive culture where everyone feels valued and respected.
So Mahindra's committed to sustainability in the present. But what about the future? What are their goals going forward?
They've set some pretty ambitious targets. They want to be carbon neutral by 2040,
Wow.
which is a big goal considering their operations. And they're aiming to achieve water positivity by 2025, meaning they'll put back more water into the ecosystem than they consume.
That's impressive.
It is. And they're continuing their efforts to empower communities, promote social inclusion. So sustainability for Mahindra, it's a journey, not a destination. They're always striving to improve, make a positive impact.
It's great to see a company so dedicated to this.
Oh,
But we're not done yet. In part 3, we're going to tackle a question that's often overlooked in these discussions about sustainability. And that's the financial side of things. Is all of this just good PR, or is it actually good for business?
yeah, that's a good question.
We'll explore how Mahindra's sustainability initiatives are not only good for the planet and society, but also good for their bottom line. Okay, so we've talked about Mahindra and Mahindra's performance, their market dominance, and their commitment to sustainability. But the big question is, does it make business sense? Can a company be both sustainable and profitable?
It's a question a lot of investors ask. Is sustainability a cost, or is it a driver of value? Well, in Mahindra's case, it seems like it's actually driving value. Their sustainability efforts are good for the planet and society, but they're also good for their bottom line.
Okay, so how is sustainability translating into financial gains for Mahindra? Give me some examples.
Well, let's start with energy. Their focus on energy efficiency, using renewable sources, it's not just about being green, it's about saving money. They're reducing their reliance on fossil fuels, which lowers their operating costs, and that directly boosts profitability.
So it's a win-win. Less environmental impact, more money in their pocket.
Exactly. And those investments in renewables like solar and wind, they also help them hedge against volatile energy prices, which we've been seeing a lot of lately. It's a smart strategy, good for the environment and good for their financial stability.
Makes sense. They're controlling their energy future. What about their water conservation efforts?
Well, in India, water scarcity is a huge issue, so efficient water management is crucial for any business. By reducing consumption, using rainwater harvesting, they're ensuring a reliable water supply for their operations.
Which means fewer disruptions, lower costs. It's a more resilient business model.
Right. And let's not forget, these proactive steps also help them comply with environmental regulations, so they avoid potential fines and penalties.
Smart. Okay, so we've talked about the environmental side. What about their social initiatives? How do those impact their finances?
Well, think about their programs to help farmers, to promote rural development. Yes, they're driven by a desire to give back, but they also create a more stable and prosperous market for Mahindra's products.
They're investing in the success of their customers.
Exactly. It's about building a stronger ecosystem. And their ethical business practices also have an impact. A company with a good reputation, known for integrity and transparency, is more likely to attract investors and partners.
It makes them a safer bet, more attractive investment.
Right. And again, those ESG ratings we talked about, those high scores, they're not just for show. They're based on concrete actions. And investors are paying attention to that.
It's becoming a key indicator for investors.
It is. And Mahindra is in a great position because of their strong ESG performance. They're showing the world that sustainability isn't just about doing good, it's about doing well financially.
So to answer that question we started with, it seems like Mahindra is proving that a company can be both sustainable and profitable.
Absolutely. They're a perfect example of how doing good and doing well can go hand in hand.
It's an inspiring story. And if Mahindra can do it, it challenges other companies to step up and do the same. So that wraps up our deep dives into Mahindra and Mahindra. We've looked at their journey, their achievements, and their commitment to building a better future. We've seen how they're balancing financial success with environmental and social responsibility.
And I think their story really shows the power of innovation, collaboration, and a belief in a more sustainable and equitable world.
It's a story that gives us hope, and it's a challenge to other businesses to follow their lead. Thanks for joining us on this deep dive. We hope you found it informative and inspiring.
And until next time, keep exploring, keep asking questions, and keep pushing for a better world.